Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden language of corporate finances and uncover the real stories behind the numbers. Today we have an interesting one from Franklin BSP Capital Corporation. It looks like they're getting ready to raise some serious cash, and we're going to unpack what that actually means for the company and its investors. Before we dive in, if you enjoy getting these straight up insights from SEC filings, make sure you're subscribed and hit that notification bell. We also have a fantastic community over on Discord linked below where we break down these documents together. Alright, so we're re-looking at a Form 8K filing, which is basically a report for significant events that shareholders should know about. This filing tells us about Franklin BSP Capital Corporation's move to secure a big chunk of money through a private offering. Think of it like a company going to wealthy investors and institutions rather than selling shares to everyone on the stock market. The main story here is that Franklin BSP Capital Corporation, or the company as they call themselves, is selling $300 million worth of new notes. These are essentially loans that investors are buying, and the company promises to pay them back with interest. These notes are set to mature in 2030 and they come with a 6.000% interest rate. Now, this is pretty standard stuff for a company looking to raise capital. They re-offering a fixed return to investors. They're selling these notes to big players like hedge funds and other financial institutions that are considered qualified institutional buyers. This is a private sale, meaning it is not open to the general public, and it's happening under specific rules that allow for this kind of deal, typically because the investors are sophisticated enough to understand the risks involved. Here is a detail that tells us something interesting. The notes are being sold for less than their face value. They're reselling them at 98.844% of par. This means if an investor buys $100 worth of these notes, they actually paying about $98.84. This little discount is a way for the company to entice buyers, and it is quite common when a company is looking to make a sale attractive. In simpler terms, they re-giving investors a slightly better deal upfront to sweeten the pot. So, what's this money for? They plan to use the funds for general business needs. This includes paying off existing debts, which is always a good sign when a company is managing its liabilities. They also plan to invest in companies that are part of their portfolio, which aligns with their main investment goals. It's a pretty straightforward use of funds, aiming to strengthen their financial position and fuel future growth. It's also worth noting that some of the financial institutions helping sell these notes, the initial purchasers, have a history of doing business with Franklin BSP Capital Corporation. They might provide investment banking services or other financial advice. This is also quite common in the financial world. These banks often have existing relationships with the companies they work with. They're essentially saying, we've worked with you before and we'll keep working with you. They're pointing out that these banks will likely continue to earn fees from the company for these services. The document also mentions Exhibit 10.1, which is the actual purchase agreement. This is the legally binding contract for this note issuance. While we don't have the full text of that here in this report, the filing references it and incorporates it by reference. It is where all the detailed terms and conditions of this deal are laid out. And finally, this report is signed off by Nina K. Bariski, the Chief Financial Officer and Treasurer. Signing off means she officially confirms that the information presented in this report is accurate to the best of her knowledge. Now, let's talk about what this all means. Franklin BSP Capital Corporation is actively managing its finances. They are raising capital not to cover losses, but to manage their existing debt and to invest in their core business. The fact that they are offering this at a slight discount to par value suggests they are eager to get this deal done and are willing to give investors a small initial premium for their participation. This isn't necessarily a sign of distress, but more a tactical move to ensure a successful offering. The company itself is an emerging growth company, and issuing these notes likely helps them fund their expansion and operational needs as they continue to grow. This move to issue $300 million in notes indicates confidence in their future prospects, as they are taking on new debt to fuel growth and manage existing obligations. The key will be how effectively they use these funds to generate returns that exceed the 6.000% interest cost. If their investments perform well, this will be a smart financial maneuver that strengthens their balance sheet over the long term. Alright, that is our breakdown of Franklin BSP Capital Corporation's latest filing. What do you think about this debt issuance? Does it signal strength or caution to you? Let us know in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deconstructions of corporate filings also. Don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and I'll see you in the next one.